All right, listen. When you bet your entire business model on the direction of one asset, especially one as wild as Bitcoin, you either become the biggest success story in history or you get your ass handed to you. There's no safe middle ground. That's exactly what's happening with Strategy, the publicly traded company once known as MicroStrategy. The firm's strategy, pun intended, was simple in theory. Buy Bitcoin, hold it, let its price go to the moon, profit. This bet turned Strategy into the world's largest corporate Bitcoin holder. But the problem is this: when Bitcoin plunges, your entire financial structure collapses with it. And that's exactly what's happening. According to One, Strategy recorded a $17.44 billion unrealized loss on digital assets in the fourth quarter, a result of Bitcoin's sharp downturn and poor market sentiment. Bitcoin has been brutally volatile, swinging from record highs to major sell-offs. And Strategy, its balance sheet is now directly tied to that roller coaster. When BTC dips, Strategy doesn't have a diversified income stream to soften the fall. It's all on Bitcoin. That means shareholder confidence declines, stock drops, and any financial forecasts turn into nightmares. What did Strategy do when the pressure increased? They lowered their earnings forecast for 2025, and that's a red flag in the corporate playbook. A reliable company doesn't revise earnings down with a market that's supposed to be bullish, yet here we are. Let's be honest, Strategy's model worked only when Bitcoin was ripping higher. When Bitcoin tanked, the discomfort became reality, and it's now crushing investor trust. If you're going to put all your chips on one horse, understand that when that horse trips, it drags you straight into the dirt. In business, especially when you're building an empire like I'm teaching you to, you never build a house on a shifting foundation. One revenue stream tied to an asset in perpetual flux, that's not strategy, that's gambling with someone else's money. But the world is watching, and the lessons here are brutal but necessary if you want to build real wealth. Now you need to understand the macro side of this story. Bitcoin isn't just a volatile asset, it's a market sentiment engine. Its price drives confidence in the entire crypto ecosystem, and companies like Strategy are effectively leverage amplifiers for Bitcoin's movements. Think of it like this: Bitcoin is the engine, Strategy is the muscle that tied itself directly to that engine. When the engine runs smooth, Strategy flies. But when it coughs, Strategy feels it hard. Recent market behavior shows exactly that. Due to broader risk aversion, Bitcoin's price has been sliding significantly. Institutional traders are moving away from crypto risk assets, especially after volatility spiked and macroeconomic fears picked up traction. The result? Heavy liquidations and market-wide sell-offs that have hammered Bitcoin's price and shaken confidence in Bitcoin-linked stocks. Here's something serious. This isn't temporary wobble anymore. Analysts are pointing to scenarios where Bitcoin could fall even deeper, with big money managers like Michael Burry publicly warning of sickening scenarios if Bitcoin's current slump continues. He projects that further declines could wipe out major holders and even bankrupt miners, a scenario that could trigger broader chaos. Now, look inward for a second. What would you do if you owned billions in inventory and suddenly the market turned cold? You'd either find ways to hedge or crack and sell at a loss. Strategy has so far doubled down, even buying more Bitcoin amid the slump, which to some is insane and to others is conviction. But here's the truth. Doubling down in a downturn only works if capital endurance is stronger than market pain, and we're watching the stress test in real time. This brings us back to positioning. Strategy's earnings, price-to-asset ratio, and even index inclusions are now under scrutiny because investors care less about future dreams and more about survival today. When indices mull removing you due to your risk profile and volatility drag, that's a serious reputational blow. That's why I'm telling you, don't build a business that cries wolf every time the market breathes hard. Build something that collects cash, creates value, and doesn't implode when one asset swings. Now, let's go into the ugly but golden wisdom part. The Strategy case isn't just a story about Bitcoin's sell-off. It's a masterclass in what not to do when building real financial empires. Because here's the bottom line. Leverage without hedge is suicide. If you put everything on one bet without risk controls, you're a speculator, not a strategist. Market sentiment flips faster than you can blink. Bitcoin's run-up created a bull narrative. Now that narrative is cracking. Companies tied to it are bleeding. Real businesses don't tie survival to one price chart.
If you did, you'd be bankrupt when Bitcoin dipped to 60K, and analysts are warning that possibility. Leverage without hedge is suicide. If you put everything on one bet without risk controls, you're a speculator, not a strategist. Market sentiment flips faster than you can blink. Bitcoin's run-up created a bull narrative. Now that narrative is cracking. Companies tied to it are bleeding. Real businesses don't tie survival to one price chart. If you did, you'd be bankrupt when Bitcoin dipped to 60K, and analysts are warning that possibility. Leverage without hedge is suicide. If you put everything on one bet without risk controls, you're a speculator, not a strategist. Market sentiment flips faster than you can blink. Bitcoin's run-up created a bull narrative. Now that narrative is cracking. Companies tied to it are bleeding. Real businesses don't tie survival to one price chart. If you did, you'd be bankrupt when Bitcoin dipped to 60K, and analysts are warning that possibility. Strategy stock is caught in a vicious cycle. The more Bitcoin price drops, the worse their balance sheet looks. The worse their balance sheet looks, the more investors flee. The more investors flee, the less capital they can raise. The less capital they raise, the harder it is to survive. This is death spiral psychology, and it's raw, brutal, and exactly what you want to avoid in your own ventures. So here's the take home for you, the real lessons. Never rely on a single speculative pillar to run your company. Build products, build recurring revenue, build value independent of market hype. Never confuse hype with fundamentals. Bitcoin hype was real. Fundamentals for a corporate treasury strategy tied exclusively to it were weak. Position your business to withstand volatility, not ride it. When markets go wrong, and they always do, you want resilience, not fragility. Never rely on a single speculative pillar to run your company. Build products, build recurring revenue, build value independent of market hype. Never confuse hype with fundamentals. Bitcoin hype was real. Fundamentals for a corporate treasury strategy tied exclusively to it were weak. Position your business to withstand volatility, not ride it. When markets go wrong, and they always do, you want resilience, not fragility. I'll say it straight. Strategy is an extreme example of what happens when belief outweighs prudence. They doubled down in a downturn. Most logical businesses would hedge, diversify, or create a revenue model that doesn't bend with the Bitcoin wind. You want wealth? You build armor around your bets, not let the market.
Let's talk about the part most crypto believers conveniently ignore: debt. Strategy didn't just buy Bitcoin with spare cash lying around. No, they borrowed aggressively, issued convertible notes, and leveraged future confidence to buy more Bitcoin. When Bitcoin was flying, this looked genius. When Bitcoin slows or drops, debt doesn't care about your belief system. Debt wants payment. According to Reuters, Strategy has billions of dollars in outstanding debt tied to convertible bonds and notes, much of it issued when Bitcoin prices were much higher. These instruments assume one thing: Bitcoin keeps rising, or at least stays strong. If it doesn't, the company faces refinancing risk, dilution risk, or worse, forced asset sales at terrible prices. That's not theory. That's how markets work, according to Reuters. Here's the brutal math. Bitcoin drops, Strategy's asset value drops, leverage ratio worsens, lenders and investors get nervous, cost of capital increases, options shrink. This is where conviction turns into arrogance. Strategy's leadership believes Bitcoin will eventually recover. Maybe it will, but debt timelines don't wait for eventually. Interest payments arrive on schedule. Maturity dates don't care about your Twitter threads. If Bitcoin stays depressed longer than expected, Strategy could be forced into selling Bitcoin at the worst possible time just to meet obligations. That's how strong hands turn into forced sellers, and markets love to crush forced sellers. According to Reuters, analysts have already raised concerns that prolonged Bitcoin weakness could pressure Strategy's liquidity position and limit its ability to raise fresh capital on favorable terms. This is the silent killer, not price drops, but access to capital disappearing. Here's the business lesson you must tattoo into your brain. Leverage magnifies outcomes, not intelligence. It doesn't make you smarter. It just makes your mistakes louder. Real empires use leverage sparingly, and only when cash flows can cover mistakes. Strategy used leverage based on belief, not cash generation. That's fine in speculation. It's dangerous in public companies. If you're building your own wealth, debt must be serviceable even in worst-case scenarios. Never assume markets will come back in time.
Never tie repayment ability to one volatile asset. This section alone is why 90% of aggressive builders fail. They confuse bravery with recklessness. Markets don't reward courage. They reward survival. Now, let's talk about people, because markets are driven by humans, not charts. Strategy's stock became a proxy for Bitcoin exposure. Investors didn't buy it because they loved the software business. They bought it because they wanted leveraged Bitcoin exposure without holding Bitcoin directly. That's fine until sentiment flips. According to Reuters, Strategy shares have experienced amplified volatility compared to Bitcoin itself. When Bitcoin rises 5%, Strategy jumps more. When Bitcoin falls 5%, Strategy collapses harder. That's leverage plus psychology working together in a nasty way. Here's what's happening psychologically. Early believers are emotionally invested. New investors bought near highs. Losses trigger fear, not logic. Long-term thesis gets questioned daily. Early believers are emotionally invested. New investors bought near highs. Losses trigger fear, not logic. Long-term thesis gets questioned daily. This creates investor exhaustion. Once investors stop believing the upside justifies the pain, they exit, even if they still believe in Bitcoin long-term. This is where the narrative breaks. And once a narrative breaks, price damage accelerates. According to Reuters, some institutional investors have already reduced exposure to Bitcoin-linked equities due to volatility concerns and risk management constraints. Institutions don't believe harder, they rebalance. Here's a hard truth most won't tell you. Markets don't wait for you to be right. They only care about timing. Strategy might be right about Bitcoin in 10 years. That doesn't help investors bleeding today. Public markets punish uncertainty brutally, especially when earnings visibility is weak. This is why diversified businesses survive sentiment shifts. When one narrative dies, another keeps cash flowing. Strategy doesn't have that luxury. Its identity is Bitcoin. If Bitcoin sentiment weakens, so does everything else. Lesson for you. Never let your personal belief become your company's only identity. Build optionality. Control the story, or the market will write one for you. Never let your personal belief become your company's only identity. Build optionality. Control the story, or the market will write one for you. Belief fuels growth, but belief without flexibility fuels collapse.
This is where things get really ugly, and most retail investors don't even notice it until it's too late. According to Reuters, there are growing discussions around whether companies like Strategy should remain in major stock indexes due to their extreme volatility and crypto concentration. Index inclusion matters more than people realize. It determines automatic institutional buying, pension exposure, and long-term capital flows. If a company gets excluded or sidelined, passive funds stop buying, liquidity drops, volatility increases, stock becomes easier to manipulate. Passive funds stop buying, liquidity drops, volatility increases, stock becomes easier to manipulate. This is a slow death spiral, not a headline crash. Institutions operate under risk frameworks. When a company's earnings and balance sheet are dominated by a volatile asset like Bitcoin, it becomes harder to justify holding it under conservative mandates. According to Reuters, some fund managers have already flagged concerns that Bitcoin-heavy companies distort portfolio risk models. This means Strategy isn't just fighting Bitcoin's price, it's fighting institutional structure. And here's the kicker. Once institutions step away, retail investors are left holding the bag during drawdowns. Retail doesn't have patience, risk controls, or capital buffers. They panic sell. This is why seasoned businessmen avoid building companies that rely on being understood later. Markets don't wait for understanding. They respond to numbers, stability, and predictability. For you, the lesson is simple but painful. Build businesses institutions want to own. Predictable cash flow beats visionary chaos. Volatility scares big money, not excites it. Build businesses institutions want to own. Predictable cash flow beats visionary chaos. Volatility scares big money, not excites it. You don't get rich by impressing Twitter. You get rich by making your business boringly unstoppable.
Let me end this with the most important truth. Strategy's leadership may still be proven right long-term. Bitcoin may recover. It may even reach new highs. But survival comes before victory. Markets don't reward martyrs. They reward companies that can stay alive long enough to be right. According to Reuters, analysts remain deeply divided. Some admire Strategy's conviction, Others warn that prolonged Bitcoin weakness could permanently damage shareholder value. That split alone tells you everything. Uncertainty kills momentum. You should never build your future on eventually. You build on what pays today, survives tomorrow, and scales over time. Bitcoin is a tool, not a foundation. Belief is fuel, not structure. Remember this when you build. Cash flow is oxygen. Optionality is armor. Diversification is survival. Conviction must bow to math. These principles aren't just words. They are the bedrock of enduring success.